Hello, good afternoon. You are watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi, and we are holding on to the green. Yes, we are off the mark of 23,000, but at least we got that mark during the trading session. We've actually now slipped into the red just around that flat line for the Nifty, but the Bank Nifty continues to outperform today as well. So after that 1,000-point rally, there's a gain of almost 150 points there, and the mid-cap index too is participating quite a bit. In fact, Nifty is tracking gains of almost 2.5% for the week gone by. It's the broader markets which were lagging behind. So you had the small cap index which was up less than 1%, and that for now seems to be the trend, that the large caps are clearly outperforming the broader markets because the advanced decline ratio too have been a bit skewed. Public sector entities within all of this volatility continue to kind of rally quite a bit. So today it's the turn of these power financiers named. PFC, REC are up anywhere between 5 to 10%, but defense names also are rising. Case in point being Bharat Dynamics. That stock is up a solid 8% right now. Earnings which we have got from companies in the last couple of hours were largely good. Hindalco, for instance, was a beat versus expectation, though no fresh update regarding the Novelis IPO. Ashok Leyland was a good set. We had seen that big rise coming in the stock, almost 3 to 4% off lows, but it's moved into the red yet again. Having said that, the margins were better, but there has been a leadership change as well with the new CFO coming on board. So that stock making up its mind. Aegis Logistics was a good set. That stock sitting with a gain of around 4%. What's on the back foot is FMCG, IT. So defensives continue to lag. And Realty 2 is seeing some profit booking. In fact, Aisha, we are not alone. There is a bit of recovery across the globe as well. So after that 600 points slide that we saw on Dow, at least for now, futures are suggesting a bit of a green tick. Asia, yes, ended in deep red, but Europe isn't as bad.
It's not as bad, but it's getting there. It's also in the red because clearly the, all the question marks about the interest rate outlook and globally really not restricted to a particular market, that's definitely weighing in on sentiment. So even as we speak right now, the DAX is down about almost 70 odd points. FTSE is headed in for a 0.5% decline. CAC mildly soft. FTSE MIB down about 0.3%. And the broader stock 600 index as well is lower now by about almost 0.5%. It's important to note that the pre-market futures, that's the US futures, they are definitely indicating a mild bit of bounce. It's very mild right now, but let's see how it actually picks up from there, because there you're seeing a sea of green. So yes, in that sense, it seems that much of the damage is already behind us. For us, we're holding 60 points higher on the futures. We are clinging on to that 23,000 mark, and L&T, HDFC Bank are your clear winners. And that's been the magic that these two stocks alone have created in just the last two trading sessions alone. In fact, we should bring up the last 5-day chart for both these stocks. L&T has, of course, had a major contribution to the market move, the index move that is. And so is the case with HDFC Bank too. In the last 7 days alone, it's moved higher by 6%. 6.5% of an uptick is what you've seen on L&T. And I think from its earnings, when L&T tanked, I think about 6 or 7% post its earnings. From there, of course, it's a more meaningful recovery for L&T. But Kunal, hi afternoon. What is it that you're making of the market texture? We made it to 23K finally.
Yeah, so I think 23K done. Now I think we'll have to wait out for Bank Nifty hitting 50K mark. Hopefully that happens very quickly. I think what we've seen is more of a carry forward move for many of the large cap names from yesterday's data points. We were looking at the likes of HDFC Bank, Axis Bank, and the likes of SBI, etc., which had seen some very strong amount of short covering. These stocks have managed to move up another leg on the upside. I'm also pretty much happy to see the small cap index actually underperforming and showing signs of weakness, because that generally indicates that the next leg of up move could be led more by the large cap names, and that could be more sustainable for the indices going forward. So all in all, I think a pretty good break about the 23K mark. Hope it sustains for the next couple of days at least.
Let's see. For now, it's not sustaining that 23,000. Let's see where we close, because if we do close above 23,000, it will be the first day that we ever do so. But the broader markets are under pressure. Say Rudramurthy is also with us. What's your take on the broader markets and what one should do with the positionings right now?
See, I continue the bullish view on market, and we will see Nifty further moving ahead from these levels. FII have just started covering their shorts. Fresh buying has now started. So I feel still for next week, we will see Nifty headed towards 23,200 and Bank Nifty can approach that 50,000 mark. Even broader market, mid and small cap will start performing further positive from here. So I continue my bullishness and still market has legs to go up. Still some more short covering and fresh buying will take this market further ahead from these levels. So I will be positive. I will carry my long positions for next week.
Right, okay, carry forward your long positions. That's clearly the word coming in. But Kunal, specifically on L&T and HDFC Bank, you think they'll continue to show leadership next week too?
Yeah, I think HDFC Bank is very important, Aisha, because I think for the first time in the last 4 months, 4 or 5 months from that Jan ceiling, when HDFC Bank was almost at 1700, 750 mark, for the first time in the last 4, 5 odd months, the stock is coming back into a technical breakout. So, there's a pattern called a Shichimoku pattern. The stock for the first time in the last 4 months is showing signs of a potential breakout above 1500 mark. The last time we'd seen the stock coming out of such a similar kind of a 4-5 month correction, and then a rally was I think in the second half of the month of October, November, and from there the stock had rallied almost 200 points. So this actually potentially could be such a kind of a strong up move for HDFC Bank. The bigger data point is the short covering which had started off for HDFC Bank yesterday, and I think that could be another reason why I would believe that the stock should see more upside. L&T, yes, the stock has moved up higher by I think 300 odd points in the last 1 month, but I believe that it's still due for a breakout above the previous highs of 3800 plus mark.
Okay, that's that on L&T as well as HDFC Bank. Bharti, of course, has been the other leader of this, last mile of the rally, 1395 on this particular stock as we speak right now. That's Bharti in trade for you. There's iShares, there's Axis Bank. All of these names have held out very, very strongly. And look at what's happening within the broader end of the market. PFC, REC have made a fresh move forward. Idea is holding up about 8.25% today, and HAL is higher by about 5.5% as well. Rudra, if I could just get you in on some of these names, PFC, REC in particular, because after a mild bit of pause, once again you're seeing renewed action here.
Yes, if you see charts of PFC, this consolidated at around that range of 360 on the lower side, and yes, now it has made the move above that levels of around 485. So closing above 485 will be very bullish to me. I still remember even when PFC, REC were correcting from the top, I was just telling you that yes, charts clearly indicate the risk reward is favorable on the long side by every dip. Now after consolidation, you are getting a breakout above 485. So every dip to that breakout level of 485 will be a buy on PFC. And this stock is headed further higher. I won't be surprised to see 540, 550 to come very soon. So PFC is a clear buy, and today you are seeing a close above that range of 485, which will be the breakout range. And when it comes to REC, yes, again, this will still perform good from current level. Looks very, very strong for me. And again, on charts, yes, the all-time highs on REC, if you see, that comes somewhere closer to around 567. So now it will make that move towards that 565, 567 zone. And once you see a close above that, yes, stock will be headed towards 600. For me, at current price, yes, REC PFC is a good buy, and every dip is a buy, and this stock is on the long side.
Followed almost 1,000-point rally within 10 days in Nifty. But what's been the entire journey from 22,000 to 23,000 like? What have been the biggest contributors? Ansh has done that analysis. Hi, Ansh.
Hi Anisha, so as we touched the 23,000 mark for the first time, we actually took 87 sessions to go from 22,000 mark to 23,000 mark. And top gainers during this 1,000-point rally were M&M, BPCL, Power Grid, SBI and Tata Steel, and all of these are trading near the record high levels only. Technically, if we see Nifty, then Nifty has been forming higher highs from last 10 consecutive sessions, advancing for last 7 consecutive sessions, and also it has given a good breakout from its double bottom chart pattern, which is very positive. This has happened yesterday actually. So this keeps the bias positive till that 22,800 stays protected on downside. But with this, we have also entered into an overbought zone, but still on a longer time frame, we look positive for Nifty. We did a market survey as well, and according to market experts, they are seeing Nifty at around 23,700 before election, which is also a positive thing. Lastly, rally seems to be getting good support from FIIs as the total long position in index future has jumped by 49% 6% in previous session, which is very bullish sign. But we may see increased market volatility in the market due to heavy position. So keep your stop losses in place.
Okay, so those were the big movers and the kind of setup that you have seen in the market, not just short covering, but longs too have gotten added, and that's something which is also supporting the sentiment, and that's why our technical experts have been maintaining their stance that perhaps 23,000 is not it. Vodafone Idea, which is of course reacting to its upgrade coming in from UBS, one of the first buys coming in. Their target price is closer to 18 if I remember it right, but definitely the stock has seen quite a bit of traction of late, and this is something even Mark Mobius has been telling us, that telecom sector is incrementally looking quite good. What the impact of elections is going to be on the markets on the other side with a fundamental expert.
Well, turning out to be a good day after all, and the markets at life highs. It's some of the contributors which are pushing the way forward on the index. And Kunal's analysis says that it's Reliance and Infosys which have been the major contributors to the rallies within the large caps, of course. But can they continue to push the index higher? What are the charts reading? Kunal, I'll hand it over to you.
Thank you, Aisha, for that. So I think it's a very interesting, chart, because three key large cap names, Reliance, HDFC Bank, as well as Infosys, cumulatively these stocks, they constitute of almost 25 to 30% of the Nifty weightage, and I think that's why the indication is that if these stocks continue to perform strongly, then the case is that the Nifty can move up higher significantly above the 23,000 mark. Now, this is the first set of data point which is very interesting. The amount of short positions which you start to see, short covering, which we start to see into these three key large cap names, almost 14,000 contracts which were unwound just yesterday on HDFC Bank, 5,000 contracts approximately on Reliance Industries, and 3,500 for Infosys. That itself tells you that how much of a short covering which has started for these large cap names, which could probably give an indication of the trends going forward. Now, the first chart, which is Reliance Industries, and as you can see that the stock over the last 3-4 months has been just stuck into this 200-point band, 2,800 broadly as a support for Reliance Industries and 3,000 as a resistance. Interestingly, the stock is nearing the third or the fourth break or a retest towards the 3,000 mark, and we've seen historically with that when a stock gets into the third or the fourth retest towards a major resistance trend line, the resistance gets broken, and you see the stock moving up significantly higher. So which means that we are nearing a big breakout for Reliance Industries. On the other hand, HDFC Bank could also be very interesting turn of events, because that stock which had underperformed, so from 1,700 mark, the stock had fallen down to as much as 1,350-60 levels in the mid of February. For the first time, the stock is nearing back towards a breakout of its 200-day moving average. And the last time when we'd seen the stock rallying up and breaking past about the 200 DMA, there was a swift rally in the next 1 or 2 weeks by a margin of 5 to 10% for a stock like HDFC Bank, which of course has a higher weightage in the Nifty as well as on the Bank Nifty. And the third and the most important chart is the likes of Infosys. Now, we know that IT stocks and the sectors are going through one of the toughest times for themselves, but we've seen historically that in 2020, when the charts for Infosys had come back towards this major weekly moving average, it acted as a major turning point for the stock. 2023 also the stock retested this major key moving average on the weekly charts, and then you saw the stock rallying. And interestingly, the third time the stock is again retested this major moving average support, which means that the risk reward could be favorable for Infosys even from here on. So which means net all three stocks are poised in a very different manner altogether, but cumulatively these stocks can probably contribute to much higher gains for the Nifty going forward.
That's a very interesting analysis. So three heavyweights, HDFC Bank, Reliance as well as Infosys, and all three poised in a way that they have more risk towards upside rather than downside. But let's take the conversation forward. We have V. Srivatsa, this fund manager and EVP at UTI AMC, joining us on the show. Hi Srivatsa, good to be speaking with you. Let's begin by discussing the market outlook, because of course there's recently been a lot of volatility on account of this entire election outcome and verdict expectations. But going forward, what is your market outlook? Have we made the top for the year, or there's a lot more room to this rally?
Yeah, hi, good afternoon. Well, in terms of the market outlook, we have had a very stellar run in the last couple of years. I think the Indian markets have been amongst the best performing markets globally. And this is led by a decent amount of earning upgrades, as well as, stability in the overall economy and also in the corporate side. Going forward, we do believe that the market valuation is at around 20-21 times 1 year forward. And of course, the mid cap and the small cap are trading at a significant premium to the large caps. In this kind of a scenario, we really don't see much scope of the PE getting re-rated. But yes, we still are hopeful of a kind of a double-digit earning growth over the next 2 years for the Nifty as such. So the market performance would more or less be in line with the earnings growth. And so far, we have seen a very decent earnings growth in the last 18 months, and we still see that momentum continuing on the back of a reasonably strong domestic economy, mild inflation, and healthy outlook on the earnings side, which should drive the market going ahead in the next couple of years.
And Mr. Srivastava, where is it that you see that earnings upside coming in?
If I look at the sectors, I think the banking still continues to be a good source of earnings growth. They have contributed in a big way in the last couple of years. We still see that continuing. Capital goods has seen a very stellar earnings growth, and we see no reason why it should slow down. That should also continue. Apart from that, healthcare and FMCG also should contribute. FMCG has been a drag that should also contribute. And the other one that I'm quite positive on is commodities, because that has seen a very sharp run up in the prices, which will start reflecting in the coming quarters.
Okay, point taken. That's the view coming in. But what's the view on private banking names particularly? Because, of course, this is one space all the mutual funds and institutionals have been very overweight on, and they've been massively underperforming. What have you been doing about your private financial holdings? Are you trimming it down, or are you looking at adding it just because the underperformance is expected to reverse soon?
Yeah, so we have been overweight on private banks for the last 1 year, and that's hurt us in the short run, especially in the last 6 months. However, we still continue to be very positive on private banks in spite of the underperformance, because the valuations are very reasonable vis-a-vis the market. So they are still trading at, it's one of the very few sectors trading at valuations below, say, a 19 level or even 16 levels. Number two is that still we see scope of earnings growth, and credit outlook still remains very good in terms of credit growth, and credit quality also looks to be quite favorable. So one factor which has impacted the private sector banks is that there has been issues with some of the large scale banks, specific to those banks, which has kind of pulled down the valuations. As we see those concerns easing, we should start seeing the outperformance of the private sector banks in the coming quarters. So we continue to be very positive, because on a valuation, especially on a relative valuation vis-a-vis the market, private bank looks to be very attractive.
Okay, that's the take coming in on some of the private banking names. Srivatsa, else is the opportunity right now? I mean, should one be looking at bottom-up stories, or would you say go with the momentum, more of the same is the kind of strategy that would work?
Yeah, specifically in terms of sectors, I did talk about private bank where there are reasonably good opportunities. The other sectors that I'm liking is healthcare, specifically on the export-oriented side. So there has been a kind of a very decent outlook on the US generics. I think the prices have stabilized. So the export-oriented healthcare companies is one where I see decent amount of opportunity, both in terms of valuations and growth outlook. And the third sector where it's more of a contra call is FMCG, where valuations are in line with probably a 3 or 5 year average. But we do believe that the worst is over in terms of the demand. So that's a very good play on the rural demand, and margins have been fairly resilient there. So these are the pockets of opportunities that I see in terms of outlook going ahead.
In your first answer, you talked about how the valuations of small cap, mid cap are trading at a much higher premium versus the large caps. In this context, are you looking at deploying more purely in large caps and trimming position in mid cap, small cap, or what's the strategy around that? And also, I wanted a word regarding these public sector entities.
Specifically come to mid and small caps, I think as an index, they are trading at higher levels. And it also implies that probably the top quartile is trading at a far, far higher levels than the overall market or the index. But given that the universe of mid and small cap is large, I still able to find some opportunities within the mid and small caps. But I don't take a strategy to move from mid to large. But yes, between the three in terms of valuation, large caps offer a very decent amount of comfort in terms of valuation. In terms of index, yes, mid and small cap don't offer that level. But having said that, since the universe is big for mid and small cap, there are opportunities which a fund manager can evaluate within the mid and small cap index. And in terms of PSUs, I think they've had a very stellar run in the last 3 years because of the change in the sentiment. And yes, there has also been a very good improvement in the overall business environment. So, say for example, in defense, there has been a sea change in the overall improvement, which has led to a massive amount of earnings growth as well as cash flows, and the valuation multiples have also gone up significantly in the last couple of years. So if I look at PSU, I think it's a bit difficult for me to put it in one basket and say that they are cheap or they are expensive. One has to look on a case to case basis. So still, I would say probably PSU banks still look good, and some of the PSU names on the gas space, in the energy space, still looks good. If I were to classify it sector wise, but on the capital goods side, on the defense side, and other sectors, the PSU is expensive and far, far higher than the private sector counterparts.
Okay.
Right.
Okay, point taken. Srivatsa, on that note, we let you go. Thanks so much for making time and speaking with us today about a whole host of sectors that you like and the market outlook. But shifting focus back to what's happening in the market in terms of technicals, clearly Finolex Cables is up 13%, Amara Raja Batteries is up 9%, Excite 2 has been doing quite well ahead of its earnings. Rudra, what's your view on Amara Raja as well as Excite? Both of these stocks have been doing quite well, and I think they're just waiting for their earnings as well, at least for Excite today.
Yeah, see, first of all, Amar Raja battery has given that breakout above levels of 1200 and volumes have been very, very positive. So after a consolidation for about last 2 to 3 weeks, now it has given that breakout and it is closing above those levels of 1200, 1205, which is very positive, and it is signaling that after this consolidation, now the stock is further headed up. So I will be a buyer with a stop loss tight at around 1200 or even 1190 on a closing basis. And yes, stock can move towards 1300, 1350 zone. Definitely a buy, and stock looks very, very strong on the chart. And when it comes to Exide, yes, Exide industry, it was way early when I was looking at a buy call. And yes, the first time when it gave breakout above 350, I never expected the current price of about 470, 75. But stock having moved up so much, yes, it is now consolidating for again last 3 weeks to a month's time, and the patterns are very similar to Amar Raja battery, what we see. Only thing is, Amar Raja has already given that breakout above 1200, but Excite is now making that move, and yes, a close above levels of around 485 confirms the consolidation is done and a fresh move will start. Yes, stock can head towards 550, 580 zone, but I will look at Amar Raja battery at current levels to buy since the breakout is already done. Excite will be a buy post 485 on a closing basis.
Okay, in fact, on that note, let's just get some closing trades as well. Kunal, what's on your list?
It's actually the same stock which you're discussing, Amara Raja Batteries and Mobility. I think it's an interesting chart. So even after this 8% in kind of an up move, I would believe that closer to 1200 levels could be a good entry point.
Right. And Rudra, what about your closing idea?
For me, Coal India looks very, very strong. So current levels of 500, 501 is a good buy. I'm looking at a positional target of about 530 to 550 with a stop loss of 490.
Okay, let's take a very quick break then on that note. And as we do that, a quick programming note, we've been conducting a mega poll amid the Lok Sabha elections on what the verdict could mean for the markets and how CIOs and market participants are all positioning their portfolios. And you as well can be a part of this survey. Just log on to our Twitter handle and follow ET Now Live. Cast your vote on today's question right on top there.
Welcome back. Overall for the market, the mood continues to be quite similar. We are not seeing big moves today, just ending the Friday on a bit of a softer note because we're pretty much flat for now. But for the week, we were seeing a gain of almost 2.5%. So that's something definitely that the bulls will like and the kind of overall setup that we have at our hands. Timken India, that's taken a rise of 10%. You also have Ratan India Infrastructure that has been gaining quite well for the last couple of days. Sirma SGS is the other one. And then Bharat Forge 2 is high by around 5%. On the losing side, you have Puravankara down 5%, Suzlon Energy is coming under pressure, and Hudco just reporting its numbers. For now, it's trading quite a bit soft overall. But I think Ansh is with us to talk to us about some other price volume buzzes as well. Ansh, what's the list looking like today?
Right, so Tata Motors will be the first stock in focus as the stock seems to have given a good breakout from its reverse head and shoulder chart pattern, which was intact for more than a month, and it has also touched 2-month high level. This shows that the stock is getting very positive here. Apart from this, Power Finance will also be in focus as the stock has actually given a breakout from its cup and handle chart pattern, and it has also touched record high level with volumes of over 1.5 times its average trading volume of last 10 sessions. Biocon is also in focus as the stock has actually given a breakout from its horizontal reverse head and shoulder chart pattern with volume of over 2 times its average trading volume of last 10 sessions, and it has also touched record high level, which shows the stock is getting more positive and having a good bullish sentiment here. Bharat Forge is also in focus as the stock was actually consolidating within its 6 session range, and now it has given a good decisive breakout from it with volume of over 2 times its average trading volume of last 10 session, and the stock has also touched record high level today. So keep an eye on the stocks.
Right, okay, Ansh, we'll leave it at that. Those are a couple of buzzers that you're currently seeing in trade. Hudko numbers out, 12% off a move on, I think, the top line. The board has also recommended a dividend. That stock, in any case, has been doing well. Today, it's a little bit somber, about 3% or so. But let's walk you through some of the other buzzers in trade. Idea continues to look good. PFC, REC still holding up. Bharat Forge is making a decent move. And then there's Hindustan Aeronautics, which has seen a relentless move. I don't know if we can pick up the 1-month chart or not. In fact, not just on HAL, but most of these defense names have done very, very well. Kunal, which out of the defense names is popping up for you?
I think everything has been doing well.
Yeah.
So difficult to now, go for a buy, fresh buy at current levels.
I'm just saying which is looking the strongest.
So HL, of course, is the strongest one out of the pack. BEL is trying to make a comeback again in terms of price performance relatively. Cochin Shipyard, GRSC, Garden Reach, etc. I think these stocks have done some 30% or 40% on an average this last month or in the last 3-4 weeks so far. So I think it's been an exceptional move for these stocks, and for many of these stocks, for example, I think for Masgao Dock, Cochin Shipyard, etc., these stocks were consolidating for the first 3-4 months of this calendar year. And then to come out with such a kind of a strong performance just about indicates that the long-term trend for these stocks is still intact. But again, as I said, that the near-term charts are very much overbought. I think that's where I think one would probably have to wait out for a phase of consolidation and then buy.
Actually, I think we had come out with that data of defense valuations. We should actually pull up that on the screen because that will tell you the kind of valuation picture which is there for all of these companies, and they're not cheap by any yardstick. I mean, if you look at the 1-year average PE for a name like Hindustan Aeronautics, it used to be 30 times. It suddenly shot up to almost 47 times actually. Even Bharat Electronics and Solar Industries, 75 times forward earnings, 61 times for Mishra Dhatu. You also have smaller names like MTAR, etc., which have actually surged to levels of 40 times forward earnings. So clearly the valuations are not supportive right now. Anand Tandon also joins us on the show, and let's begin the discussion with these defense names itself. It's a very tricky setup that you have. You don't feel like selling these stocks because they continue to do well. You also have FOMO on one hand because for a person who's missed out on this rally, there's no way to catch up. What should one do? Just stay away, give up on that FOMO, or even now perhaps participate a bit?
Well, fresh money buys, I don't think certainly are warranted. If you're holding on to it, you can obviously continue for some time till you begin to see a crack in the market or in these particular stocks. How do you play defense? You don't play defense in India. You go buy outside. Most of the companies globally will be far cheaper than what you can buy in India.
Okay, makes sense. Of course, the valuations have run up just so much that it would be a little foolish to step in right now. But Idea, Anand, I don't know if you've been tracking, not just Idea, in fact, Bharti as well has had a phenomenal move.
Move is predicated on the fact that you have to assume that there will be an increase in ARPU. In other words, all of us will be ending up paying significantly higher than we have for our cell phones. Most of the crack happened because of Jio coming in and fighting for market share. That is now history, right? Today, Jio has the market share it requires, and therefore, with a three-player market, I'm assuming BSNL doesn't do much. You obviously it's almost they are kind of creating a situation where they will be raising money prices for themselves, and therefore being able to make more profits. Among that, even then, Idea, I think, remains the weakest player. They have a lot of catch up to do, both in terms of their investments in technology and even to retain their own investor base, their own subscription base currently, because I think they have the weakest product line. So the best way to play it would continue to be Bharti. Jio has too many other, Reliance is what you really need to buy, and that has obviously got many other triggers, but it's not a pure play kind of thing.
Taken, but there is that opportunity which is clearly visible in the telecom names. Let me actually bring on board what Mark Mobius had to say on the matter as well, because he did point out that while they have been looking at Airtel, Vodafone Idea is also a name which they've added to the list of their portfolio. Listen into a slice of that conversation.
I think the telecom sector is looking very interesting. Vodafone Idea is particularly interesting. We're looking at that as well.
Did I hear you say Vodafone Idea, Mark?
And also, I was mentioning Vodafone looks interesting. And in the power sector, by the way, I also wanted to mention that the power sector is particularly interesting. Such stocks as Ratan India, that kind of stock are going to be very interesting going forward.
Ratan India in your portfolio, I can also see there is Vari Renewables. This stock is done exceedingly well. Any reason why you've added Ratan India and Vari Renewable in your portfolio?
It's all about growth. At the end of the day, stocks like this are going to benefit from the overall growth in the economy.
Right. Anand, much like defense, where else do you feel that it's time to now tread with caution?
The whole market, there's almost nothing in the market that looks cheap by valuation standards. And even by momentum standards, I think, much of the market has had a fairly serious momentum. So the companies that have not done well are possibly the only places that one could be looking at. And, there are no great news there. But despite that, things like private sector banks, which have grossly underperformed, and perhaps some of the other names that are not doing as well could be looked at. But that's really pushing it. Other than private sector banks, which are very medium to long term, I think will do reasonably well from here also. The challenge remains that most of the companies that you are not doing well are for a very good reason. And when you start trying to buy just because the stocks are relatively cheap, you are basically making a compromise in terms of the earnings quality and the growth potential. Given where the market is, I don't think this is the time necessarily to be doing bottom fishing.
It's time to do bottom fishing, because then you're clearly compromising on the quality and the fundamentals. But if you're buying something for growth, that seems to be priced in already. Numbers from Manappuram Financials up for you on the screen. It looks like a good set just by the first look, because the profitability has come in at 563 crores versus 415 crore last year. And the NII too has shot up by a substantial 32%. We had, of course, got the number of Asirvad, which is a subsidiary of Manappuram earlier in the day, and that too were impressive. So these are the latest numbers coming in from Manappuram. The stock is pretty much sideways, not reacting in a big way to the earnings as yet. But Ashok Leyland was the stock which was reacting to its earnings. The margins were a sizable beat versus expectation, but then the flip-flop happened on account of the overall changes that were made to the leadership team. The earlier CFO has been elevated to the director of M&A and finance, while there's a new person who's coming in at the CFO position. But on the charts, Kunal, what would be your view on Manappuram as well as Ashok Leyland?
So Manappuram could be interesting as a contra bet from current levels of 179. The stock so far has not shown any major signs of trend, but the risk reward at current levels could be a bit more better for Manappuram. And we've seen historically that the stock generally becomes a very good buy at support points rather than on breakout points, because on breakouts the stock generally loses momentum immediately post a breakout for itself. So I think this could be a good risk reward play for Manappuram at current levels. Ashok Leyland also, I think, post results, when you look at the charts over the last few days and the breakout about that 175, 185 mark, which was a huge resistance for Ashok Leyland. I think post that the stock has gone through a very strong uptrend, breaking past about 200 mark. So I believe now that this 200 level could be a very strong support for the stock. And I think at current levels of 212, we could be looking out for targets of at least 225 to 230 for Ashok Leyland.
Okay, That's the take coming in on some of the buzzers there. Still going strong for both L&T as well as HDFC Bank. They're still pretty much in pole position on the index as we speak right now. Bharti as well is catching up. BPCL, Axis Bank are all holding out well. ITC, Tata Consumer, it's the consumption leg which is taking a bit of a breather today. You could add even Titan to that list. So they are stocks which are not doing all that well. But Anand, you think a contra call in the market could be IT, or rather, are you getting conviction for IT at all, or is it still an avoid?
I don't think there is any significant conviction on IT. There is, it will still remain a fairly weak performance that you will see from most companies in terms of volume growth. And consequently, I don't think that we are looking at anything much more than maximum or double-digit growth in the bottom line at best for most of the companies. In that kind of scenario, buying companies which are trading fairly expensive, both relative to their historical valuation profile as well as their given their context, given their growth prospects currently, I think it remains a challenge why you should be buying anything big. Now, given that you would have to have some allocation if you are running a portfolio, so I would imagine that you would pick up one or two names and keep it there. But by and large, the general purpose IT services business is, I think, not looking very rosy right now.
But the biggest talking point, of course, in the markets right now is election and how the markets will be behaving around that. We had culled out the data as to how the market behaves maybe, 1 month prior, 1 week prior versus 1 week later. And more often than not, that we have seen that ahead of the, elections, the market actually rallies. And post that, at least over the last 2-3 times, actually 2 out of the 5 times, we had seen that the markets had corrected, while just in 2019 and 2014, when NDA had come back to power, both the times we had seen that ahead of the elections was also a big rally, and 5 days after the election too, it was followed up by a big rally. 2014, you can call it a bit of a surprise, but 2019 again, it was factored in that the NDA government is coming back, and despite that, there was almost a 7-8% move in the markets ahead as well as after the election. What do you think will happen this time around, Anand? Because we're already running, 2.5% for this week itself, and we've rallied almost 1,000 points from the bottom. There's 1 week still to go ahead of that election. But post that, let's say on June 6th, 7th, do you think it will start being all about profit booking, all about, a sideways move for a long time?
So let's look at two extreme cases, right? Currently, the market assumes that the current dispensation will continue. Assume it does. What is the new earnings that is going to come through, or what is the new reason why the stock should rally? I can't find any. Globally too, the US market is beginning to show signs of significant weakness. And if we were to follow anything that's come from that market, again, there would be some amount of pressure that may build up in India as well. The only thing that is currently driving the market, perhaps, for the largest part has been the retail, and now for the last couple of days, maybe the institutional players from overseas, which could be simply a reallocation of money because money has to move out of the US. So those kind of drivers are more important right now than the local election. Take the other case, take the worst case extreme, you have a change in government. Certainly a certain amount of uncertainty and consequently volatility can be fully expected. But the volatility is unlikely to be on the upper side. So either way, the way I look at it is post-election, the upside has no great triggers. Downside, one scenario at least shows that there is a potential for a significant downside move. Otherwise, it will be more the impact of the overall global markets that will affect. So clearly, to my mind, going into the market, one needs to be a little cautious, either reduce positions or take buy protection.
Right, okay. That really is the take coming in on how is it that one should be positioning ourselves ahead of the big election day. But, we've been catching a lot of voices as well and, speaking to them as to what is this big June 4th day really going to mean for the markets. Are we already seeing a pre-election run-up? Is it going to be then a sell-on news? And how is it that you should be positioning your portfolio? In fact, here are a couple of market voices highlighting the same, if we can just play that soundbite now.
My worry is more on the global market. Less India is already factored up to that extent. Its fall is happening. Maybe it can correct further. I'm not going to rule out. But The best way to play this market is through sector rotation, stock rotation. You do get such opportunity. Closer to the event, we have raised significant amount of cash level, which we have never done in the past. So we have a good amount of cash. If there is a market fall, we'll be buying opportunity.
The continuity of the current government and current policy doesn't seem to be still, I mean, the continuity looks to be an extremely high priority event, like 95, 97% types, or maybe even 99%. Good monsoon and good continuity of the political setup and the capex boom continuing, tax collection being good, I think we are in good for, again, next 12 months, and after that we'll see. Most of the people in the market, they should also get reconciled to 10-15% correction. And once that is there, you're reconciled to that and you buy the good stuff, high ROE, high growth at reasonable P, you do well.
Yes, today it is fair to say that the market believes that there will be continuity. So, if something goes wrong with that hypothesis, will you get a deep correction? I think you will, right? But we've seen historically that if the underlying stocks that you own have fundamentals, they have earnings behind it, they have cash flows behind it, value will come back.
Okay, so that's the view coming in as far as market mood is concerned. But let me toss it to say Rudramurthy as well, because the Adani group of stocks have seen quite a bit of rebound of late. What within that pack looks the strongest to you?
Rudra, Adani ports looks very, very strong. And if you look at Adani Enterprises first, it has now given that close and breakout above 3350. So once this move above 3350 sustains on a closing basis, yes, further legs to this long consolidation of about 6 to 7 months will end and stock will be headed up. And for me, above 3350 close, which is most likely today, stock is headed towards 3500. And that will be my top pick available in F&O also. And if you see even charts of Adani Port, again, similar patterns, but it is just awaiting that close above levels of around 1425, 1430. So let it close above 1430. Then I will have a buy on Adani Port, but most likely to give that breakout above 1430 on a closing basis. So yes, my top two picks from Adani Group will be Adani Enterprise 1 and then Adani Port.
Taken. So that's the view coming in as far as some of these Adani group of stocks are concerned. Adani Ports definitely looking strong right now. But in terms of the big movers, Aegis Logistics has actually gained further ground now, 15% higher. Yes, the earnings were good and Street has taken its time to digest of all of that. So it's not that there was a sudden move post earnings. It's a very calibrated move that we are seeing. Of course, the company is looking at expanding its presence in both the eastern as well as the western coast. And that is something which will augur well for the company's earnings going forward as well. In terms of the other big buzzers, well, from the frontline index, HDFC Bank is one which is doing the maximum heavy lifting for now. L&T is up 1%, Bharti Airtel, Axis Bank as well as NTPC. TCS is down and out. ITC too, after its earnings, is not seeing any amount of run up, and Reliance is pretty much sideways. But let me ask you about the auto pack as well, Anand, because it seems like there is a bit of peaking out there as well. The interest seems to have dwindled a bit. Would you concur with the view or not really?
Well, I don't see the excitement in auto at all. Clearly, the numbers are still somewhat weak, except for the very high-end segment. So the only growth, for example, in passenger vehicles that we're really seeing is happening in the high-end SUVs. That's not a very large market in my view, and it's not something that can sustain very high levels of growth for a long period of time. You have to get back to the middle segment, which is where the bulk of the market is. And we aren't seeing that growing. Now, even if you take the two-wheelers, which has seen a resurgence of interest, we are just barely at the level we were 5 years ago, and the valuations are perhaps 3 times as much. So are you going to be able to sustain that kind of growth rate that we have seen just because you're coming out of a low base? I'm not so sure. Tractors, again, the story is similar. So there are hardly any segments in the market other than what we've been talking about for a long time, which is that the higher end of the market where the income has not been affected by inflation or by any adverse economic movement around the world is the only part where the consumption remains strong. We have to wait for a broader level of consumption to come through before looking at things like auto, where perhaps a more sustainable position can be done. The technological challenges are also quite high. Right now, you are looking at EV and a lot of other challenges which still have to play their way through the system. We don't know how India will compete across many of the newer players. I mean, every day you have a new manufacturer coming in. China has just released a new manufacturer who had nothing to do with auto, having delivered a vehicle which is already sold 10,000 at a fairly interesting price. So I think the technology as well as the market challenges are very high in auto. The current valuations don't justify.
Rudra, what is your take on the likes of M&M as well as Maruti? I mean, they've had a fair share of run-up, but do you think there's further headroom to these names on the charts?
Yes, for me, large cap will definitely perform well, and these are stocks which are just waiting a breakout. So if you see specifically on Maruti, the close on Maruti above levels of around 13,075 confirms that yes, the consolidation is done and stock can further move up. And if you look at charts of Mahindra and Mahindra, yes, again, this stock having made that big move already from levels of the breakout level was around 1975 2000 zone. From there we have seen a non-stop rally towards 2500 plus, and now again any consolidation and any move towards 2550, I will be a buyer. Even at current market price, I will be a buyer. So definitely stock looks very strong. Both Maruti and M&M will do well. And I feel because FIIs have now started buying, large caps will do very, very well from current level. Stocks like HDFC Bank, Reliance from current level still have a lot of space to go. Another 1 week time closer to that exit poll, still this parabolic move will continue. So short-term traders stay long and stay with large caps for another 1 week. Then let us take a call at that point of time.
Take a look at PNC Infratech right now. I think that stock has shot up. Let's pull up the intraday chart and see what's happening, because that stock has been doing quite well as it is for the week. Let's pull up the 5-day chart, because there was that order win that the company was the lowest bidder for. So there was a midweek reaction to that, and this week itself that stock is up a solid 34%. Let's pull up HG Infrastructure as well and see whether it's managed to mirror the move or not. Even Ashoka Buildcon, because the commentary for FY25 guidance has been very strong. Anand, what do you make of these smaller, infrastructure companies? Because of late they had gone out of flavor because Street was not willing to back on those balance sheets which were a bit leveraged. But clearly there seems to be some sort of interest coming back on the likes of NCC, PNC Infrastructure, KNR Constructions of the world, etc.
Most of them are very robust order books. The challenge with the infrastructure company is always that the margins are somewhat low. I mean, you operate at 4-5% net margin. And that's the kind, when you're doing a contractual job, that's the kind of retention that the contractor actually wants to keep, the contract giver. So effectively, you have no cash flow. Your cash gets sucked up, and as your order book, as your size increases, your working capital increases, and if there is any delay in payments, you get into a trouble. Currently, the situation is such that it is loaded in favor of the construction companies. Orders are more, companies with the capability to deliver are fewer. Therefore, the margins have somewhat increased, and to that extent, the growth rate, the growth path remains fairly robust. So, if you can find companies which are not particularly expensive relative to the fact that their order books will cause them to deliver a growth of maybe over the next 3 to 4 years, most of them will double their size. You could be looking at a place where you could hide for some near-term thing. However, that said, if you are looking at the large cap, you have very few options, and you pretty much have to hang in there.
Just hang in there, at least when it comes to the large caps. That's the word coming in from Anand. Anand, we'll let you go on that note. And as we begin winding up for the week, let me get in some BTST trades going. Kunal, you go first.
So I'll go with HDFC Bank as the first one to soliciting a buyer at this current level of 1510, 1520 mark for a target of 1550. Stop loss at 1490, and M&M Finance is the other stock which is also coming back into a breakout mode. So about 270 looks attractive for a target of 288. Stop loss at 258.
Right, Rudra, what about your BTST ideas?
First a buy on Tata Power. I'm looking at initial target of 460, 465 to come with a stop loss of 445, and also a buy on NMDC, looking at initial targets of about 280 with a stop loss of 265.
Let's begin winding up for the day and the week as well. And it's quite interesting that the positioning, both when it comes to the gainers on the index as well as the losers, is largely the pharma names in there. So while yes, Adani Enterprises has been your top mover, but Cipla has had a very handsome run. So has Divi's Labs ahead of its numbers next week. And Sun Pharma has been the rank underperformer, as has been Apollo Hospitals. Well, I'll hand it over to Vinny to wrap up the day.
So talking about today's day, first time the Nifty did manage to touch that 23,000 mark. But yes, when we're looking at it in terms of the close, the Nifty is going to be closing at just slightly below the 23,000 mark. 22,950 levels approximately is what the Nifty is closing at. The mid and small cap have given up their opening highs, and Nifty mid cap will be closing mildly in the red, down almost 0.2% is what the small cap is going to be closing in at as well. Look at the Nifty Bank, that's managing to hold on to some bit of a gain today, up almost 0.4%, and among the top gainers in terms of a sector is the banking side as well as the media, which managed to hold on to gains of almost 1% in trade today. Other than that, let's look at the Sensex, because yes, during the week what we did see is the Sensex hit record high levels, and Tata Steel, L&T was something that was leading overall for the Sensex, while for the Nifty for the week we did see some good moves coming in from Adani Enterprises as well as Coal India, which led the strong gains for the week. Other than that, obviously, let's not forget that mid-cap today, yes, maybe is closing with a bit of a subduedness, but overall for the week, it did manage to hit the 52-week high level. So yes, keeping an eye out on that as well. In terms of the small cap, that advanced for the second consecutive week overall that we would see would be Nifty small cap would be closing in the green. Other than that, today, let's watch out for some of these individual movers. We did have Hindalco that reported their numbers. Keep an eye out on Hindalco. Did report a good number, but yes, given up some of those gains. We'd have Aegis Logistics, which also given good commentary in terms of the update from its presentation as well, which was quite strong. That kept the stock a buzz. It was up as much as 14-15%, and as of now will be closing with those strong gains of 14-15%. For today's day, also what we saw as a strong move coming was in terms of HDFC Bank, BPCL, Bharti Airtel on the as well as Ultratech Cement, which managed to hold on to very, very good gains. What was on the losing end today of the Nifty 50 was Adani Ports, Tata Consumers, Titan as well as Telecom not managing to hold on to any bit of a gain today, and clearly causing some bit of a pressure was the stocks in trade today. Mid-cap side, when you look at some of the mid-cap names and in terms of mid-cap movers, we did have Bharat Dynamics, Vodafone Idea. We did have a brokerage note that came in this morning on the telecom space. So Vodafone Idea was among the pick, and that is why Vodafone Idea managing to hold on to some bit of a very strong gain of 7% today. Bharat Forge also managed to hold on to gains of 5%. BSC closing with gains as well as Tata Tech among the names that are seen in terms of strong gains of 3% uptick there for Tata Tech. While let's move on and talk about some of these individual movers, what did well today for the Nifty Media. And in terms of Nifty Media, what we saw was a move was Saregama managed to still hold on to gains. After its numbers, it's seen a bit of a buzz, and that's what has been continuing. And today, in terms of an overall advanced decline ratio, a bit of that is moved more towards the decline by the end of the day. And that's how we'll be overall closing the week when you look at it. Nifty touching fresh highs, let's not forget that, as well as all major indices will be ending, seems like, the week on the positive side, with Nifty Metal obviously seeing strong second consecutive week of gains, and that's how we'll be closing the week as well.